Question 1. Under a standard Texas personal auto policy, which of the following situations would be covered under liability coverage? Part A. A. The insured intentionally rams their car into a neighbor's fence. B. The insured's teenage son, who lives with the insured, accidentally backs into a parked car while driving the family vehicle. C. A mechanic causes an accident while test driving the insured's car for repairs. D. The insured causes bodily injury to a passenger while operating their vehicle as a taxi. Answer: B. The insured's teenage son, who lives with the insured, accidentally backs into a parked car while driving the family vehicle. Liability coverage on a personal auto policy protects the insured against financial loss arising from legal liability for bodily injury or property damage to others caused by an auto accident. This coverage extends to the named insured and resident family members, so the son's accident is a covered event. The policy specifically excludes intentional acts, damage that occurs while the vehicle is used for a public or livery conveyance like a taxi, and situations where someone in the auto business is operating the vehicle. Remember, auto liability follows the driver and the car, but specific exclusions are always in place for intentional acts and commercial use. Question 2. In Texas, if an insurer cancels a personal auto policy that has been in effect for more than 60 days, which of the following is a permissible reason for cancellation? A. The insured's age. B. The insured files a claim for a not-at-fault accident. C. The insured's driver's license is suspended. D. The insured gets a single speeding ticket. Answer: C. The insured's driver's license is suspended. The suspension or revocation of a driver's license is a valid reason for an insurer to cancel a personal auto policy at any time, as it represents a substantial increase in the hazard insured against. Texas law highly restricts an insurer's ability to cancel a policy after it has been in force for 60 days, limiting it to specific reasons like non-payment of premium, fraud, or a significant change in risk like a license suspension. Minor infractions like a single speeding ticket are typically grounds for a premium increase or non-renewal, not midterm cancellation. Remember this rule as a consumer protection measure. After the initial 60-day underwriting period, an insurer can't drop you for a minor reason, but they can for major issues that fundamentally change your risk profile. Question 3. In Texas, an insurer intending to non-renew a personal auto policy must provide the named insured with written notice at least how many days before the policy's expiration date? A. 10 days. B. 20 days. C. 30 days. D. 60 days. Answer: C. 30 days. Texas law specifies the notice periods for policy non-renewal to ensure policyholders have adequate time to secure new coverage. For personal auto policies, an insurer must mail or deliver a written notice of its decision not to renew at least 30 days prior to the expiration date. This rule protects consumers from suddenly finding themselves without mandatory auto insurance. A good way to remember these timeframes is that significant actions like non-renewal or cancellation for reasons other than non-payment usually require at least 30 days' notice. Question 4. Which of the following best defines the principle of subrogation? A. The transfer of the right to sue from the insured to the insurer after a claim is paid. B. The insured's duty to report a claim in a timely manner. C. The process of settling a claim dispute through an impartial third party. D. The sharing of a loss between two or more insurance companies. Answer: A. The transfer of the right to sue from the insured to the insurer after a claim is paid. Subrogation allows an insurer, after paying a loss to its insured, to step into the insured's shoes and pursue recovery from the at-fault third party. This principle prevents the insured from collecting from both their insurer and the responsible party for the same loss, thereby upholding the principle of indemnity. For example, if another driver runs a red light and hits your car, your insurer pays for your repairs and then subrogates against the at-fault driver's insurance company to get its money back. Just think of subrogation as substitution, the insurer substitutes itself for the insured to seek repayment. Question 5. The Texas Fair Plan Association is designed to provide what type of insurance? A. Flood insurance for all Texas residents. B. Basic property insurance for those unable to obtain it in the standard market. C. Low-cost automobile liability insurance for high-risk drivers. D. Workers' compensation for small businesses. Answer: B. Basic property insurance for those unable to obtain it in the standard market. The Texas Fair Access to Insurance Requirements (FAIR) plan is an insurer of last resort for property insurance. It offers essential property coverage, like protection from fire and windstorm, to qualified property owners who cannot secure it through the voluntary or standard insurance market, often due to location or other risk factors. The FAIR plan does not compete with private insurers but rather provides a safety net for those who are otherwise uninsurable. It's crucial to remember that this plan provides only basic property coverages, not auto or liability insurance. Question 6. A temporary insurance agent license in Texas is valid for a maximum of A. 30 days. B. 90 days. C. 180 days. D. 1 year. Answer: B. 90 days. The Texas Department of Insurance, TDI, may issue a temporary license to an applicant for a period not to exceed 90 days without requiring an examination. This allows the individual to begin working under supervision while preparing for the full licensing exam, often in situations like the death of an agent to ensure continuity for the business. This license is non-renewable and cannot be issued more than once in any 6-month period. Think of a temporary license as a short-term, introductory permit to get started in the industry under specific conditions. Question 7. A tornado rips the roof off a home, allowing heavy rain to enter and ruin the furniture and carpets inside. The tornado is considered the proximate cause of the loss to the furniture and carpets. This type of loss is known as A. Indirect loss. B. Direct loss. C. Consequential loss. D. Speculative loss. Answer: A. Indirect loss. An indirect loss, also known as a consequential loss, is a financial loss that occurs as a result or consequence of a direct loss. The direct loss was the physical damage to the roof caused by the tornado. The resulting water damage to the contents and the potential cost of living elsewhere during repairs are both indirect losses because they happened as a consequence of the initial direct damage. A good way to separate them is to ask, did the peril, tornado, touch the damaged item? If not, it's likely an indirect loss. Question 8. In Texas, personal injury protection, PIP, coverage in an auto policy must be offered with a minimum limit of A. $1,500. B. $2,500. C. $5,000. D. $30,250. Answer: B. $2,500. Texas law mandates that every auto liability policy include personal injury protection, PIP, coverage unless it is rejected in writing by the insured. The minimum limit that must be offered is $2,500 per person. PIP covers medical expenses, 80% of lost income, and the cost of hiring a caregiver for the insured, resident family members, and passengers, regardless of who was at fault in the accident. Think of PIP as immediate, no-fault medical and wage loss coverage to help injured parties right away without waiting for a fault determination. Question 9. Which of the following is an example of a moral hazard? A. Leaving car keys in the ignition while running into a store. B. A homeowner exaggerating the value of stolen items on a claim form. C. A building with faulty wiring that has not been repaired. D. Living in a coastal area prone to hurricanes. Answer: B. A homeowner exaggerating the value of stolen items on a claim form. A moral hazard arises from a person's character, habits, and intentional, unethical behavior, such as dishonesty, that increases the chance of a loss or the size of a claim. Exaggerating a claim is a deliberate act of fraud stemming from the insured's poor character. This is different from a moral hazard, indifference or carelessness, like leaving keys in a car, or a physical hazard, a tangible condition like faulty wiring. Just remember, moral relates to morality and a person's conscious, wrongful actions. Question 10. Under a dwelling policy, which form provides open peril coverage for the dwelling and named peril coverage for personal property? A. DP1, basic form. B. DP2, broad form. C. DP3, special form. D. HO3, special form. Answer: C. DP3, special form. The DP3, or special form, provides the highest level of protection among the dwelling policies by covering the dwelling, coverage A, and other structures, coverage B, on an open peril basis, meaning it covers all risks of direct physical loss except those specifically excluded. However, personal property, coverage C, is covered on a named peril basis, meaning it's only protected against the specific perils listed in the policy, which are similar to those in the DP2 broad form. The easy way to remember this is that special, DP3, gives special, open peril treatment to the structure itself. Question 11. Which part of an insurance policy personalizes the policy by specifying the named insured, property covered, policy limits, and premium? A. The insuring agreement. B. The conditions. C. The declarations. D. The exclusions. Answer: C. The declarations. The declarations page, often called the deck page, is the section of the policy that is unique to each policyholder. It contains the essential information that identifies who and what is insured, including the insured's name and address, the policy period, the specific property or risk insured, the coverage limits, the deductible, and the premium amount. Think of the declarations as the who, what, where, when, and how much of the insurance contract, setting it apart from the standardized language in the rest of the policy. Question 12. The Texas Windstorm Insurance Association, TWIA, provides coverage for which of the following perils? A. Fire and lightning. B. Windstorm and hail. C. Flood and rising water. D. Theft and vandalism. Answer: B. Windstorm and hail. The Texas Windstorm Insurance Association, TWIA, is a state-created insurer of last resort that provides windstorm and hail insurance for properties in designated coastal areas of Texas. It was established to ensure coverage is available for these specific perils, as many standard market insurers are unwilling to take on that high level of concentrated risk. It is important to note that TWIA policies do not cover other perils like flood, which must be purchased separately through the National Flood Insurance Program, NFIP. When you see TWIA, think wind and hail on the coast. Question 13. Which of the following defines a peril in property insurance? A. The cause of a financial loss. B. A condition that increases the likelihood of a loss. C. The transfer of risk from an individual to an insurer. D. The uncertainty concerning a loss. Answer: A. The cause of a financial loss. A peril is the specific event or cause of a loss that is insured against in a property insurance policy. Examples of perils include fire, windstorm, hail, theft, and vandalism. This is distinct from a hazard, which is a condition that increases the probability or severity of a loss caused by a peril. For instance, a fire is the peril, while storing oily rags next to a furnace is a hazard. Just remember, the peril is what actually happens to cause the damage. Question 14. An individual who cannot obtain auto insurance in the standard market due to a poor driving record might seek coverage through which Texas mechanism? A. The Texas Fair Plan Association. B. The Texas Automobile Insurance Plan Association, TAIPA. C. The National Flood Insurance Program, NFIP. D. The Texas Windstorm Insurance Association, TWIA. Answer: B. The Texas Automobile Insurance Plan Association, TAIPA. The Texas Automobile Insurance Plan Association, TAIPA, is the state's assigned risk plan for auto insurance. It is a market of last resort designed to provide basic auto liability insurance to high-risk drivers who have been rejected by at least 2 insurers in the voluntary market. All insurers writing auto insurance in Texas must participate in TAIPA and accept their share of assigned high-risk drivers. Remember TAIPA for Tough Auto Insurance Placement, helping those who can't get coverage elsewhere. Question 15. A written document that temporarily provides insurance coverage until a complete policy can be issued is known as A. Certificate of insurance. B. Binder. C. Warranty. D. Representation. Answer: B. Binder. A binder is a temporary agreement that provides evidence of insurance coverage until the formal insurance policy is issued. It includes the essential terms of the policy, such as the names of the parties, the extent of coverage, and the policy term, and serves as legal proof of coverage for a short period. For example, a home buyer might receive a binder from their agent at closing to prove to the mortgage lender that the property is insured. A binder binds the company to provide coverage, acting as a placeholder for the actual policy. Question 16. In Texas, all of the following are considered unfair claim settlement practices except A. Failing to promptly acknowledge communications regarding a claim. B. Requiring a claimant to produce a federal income tax return unless ordered by a court. C. Denying a claim after a reasonable investigation reveals the policy does not provide coverage. D. Not attempting in good faith to effectuate a prompt, fair, and equitable settlement of a claim. Answer: C. Denying a claim after a reasonable investigation reveals the policy does not provide coverage. Unfair claim settlement practices are specific actions by an insurer that are unethical or illegal, such as deliberately delaying payment or misrepresenting policy provisions. Denying a claim is a perfectly acceptable and fair practice if a reasonable and thorough investigation shows that the loss is not covered by the terms of the policy. The other options describe actions that are considered unfair because they involve bad faith, unnecessary delays, or unreasonable demands on the claimant. The key is that a denial must be based on a legitimate, good faith investigation of the facts and policy language. Question 17. The authority of the Texas Commissioner of Insurance includes all the following powers except A. Issuing rules and regulations to enforce insurance laws. B. Conducting investigations and examinations of insurers. C. Setting the premium rates for all lines of insurance sold in Texas. D. Issuing, renewing, suspending, or revoking insurance licenses. Answer: C. Setting the premium rates for all lines of insurance sold in Texas. The Commissioner of Insurance has broad authority to regulate the business of insurance in Texas to protect the public, which includes rulemaking, investigations, and licensing. However, the Commissioner does not set the premium rates for insurers in a competitive market like Texas. Instead, the Commissioner's role is to ensure that the rates proposed by insurance companies are adequate, to prevent insolvency, not excessive, to protect consumers, and not unfairly discriminatory. Insurers file their rates with the department, but the department approves or disapproves them rather than creating them. Question 18. Under a standard homeowner's policy, HO3, coverage B, other structures would apply to which of the following? A. A detached garage on the insured's property. B. A tool shed attached to the main dwelling by a breezeway. C. A gazebo located at a vacation property owned by the insured. D. Personal property stored inside a detached garage. Answer: A. a detached garage on the insured's property. Coverage B of a homeowner's policy provides protection for structures on the residence premises that are separated from the dwelling by clear space or connected only by a fence or utility line. A detached garage perfectly fits this definition. An attached structure, like the toolshed connected by a breezeway, would be considered part of the main dwelling under Coverage A. Coverage B also only applies to structures at the insured location listed on the declarations page, not a separate vacation property, and it covers the structure itself, not the personal property inside it. Question 19. An insured's boat is stolen from a storage facility. This loss is an example of what kind of loss? A. A direct loss. B. An indirect loss. C. A liability loss. D. A speculative loss. Answer: A. A direct loss. A direct loss is a financial loss that results from the direct physical damage, destruction, or theft of property. In this scenario, the theft of the boat is the immediate, physical event that caused the financial loss for the insured. An indirect or consequential loss would be a secondary loss that occurs as a result, such as the cost of renting another boat while waiting for an insurance settlement. The simplest way to identify a direct loss is to see if the property itself was physically harmed or taken. Question 20. In Texas, uninsured/underinsured motorist, UM/UIM, coverage can be used to cover all the following except: A. Bodily injury to the insured caused by a hit-and-run driver. B. Bodily injury to the insured when the at-fault driver has no insurance. C. Bodily injury to the insured when the at-fault driver has insufficient liability limits. D. Damage to the at-fault driver's vehicle. Answer: D. Damage to the at-fault driver's vehicle. Uninsured/underinsured motorist coverage is designed to protect the insured, not the at-fault party. It pays for the insured's own bodily injury, and property damage, if purchased, when they are in an accident caused by a driver who has no insurance, uninsured, or not enough insurance to cover the damages, underinsured. The coverage would never pay to repair the at-fault driver's vehicle. That driver is responsible for their own damages. Think of UM/UIM as a substitute for the liability insurance the other driver should have had. Question 21. Which provision in a property policy specifies that the policy will not pay more than the actual amount of a loss, to prevent the insured from profiting from the loss? A. Subrogation. B. Indemnity. C. Adhesion. D. Appraisal. Answer: B. Indemnity. The principle of indemnity is a core concept in insurance, stating that the purpose of insurance is to restore the insured to the same financial position they were in just before the loss occurred, but not to provide a profit. This means the insurance payment should cover the actual loss sustained, and no more. Provisions like subrogation and determining actual cash value are methods used to support and enforce the principle of indemnity. Simply put, indemnity means to make whole again, not to make wealthier. Question 22. Which of the following is required for a risk to be considered insurable? A. The loss must be catastrophic to the insurer. B. The loss must be intentional. C. The loss must be definite and measurable. D. The premium must be unaffordable for the average person. Answer: C. The loss must be definite and measurable. For an insurance company to cover a risk, the potential loss must have certain characteristics, one of which is that it must be definite and measurable. This means the insurer must be able to determine when a loss has occurred and assign it a financial value. For example, the value of a car destroyed in an accident can be clearly determined, making it a measurable loss. Insurers avoid risks where the loss is vague, speculative, or impossible to value, and they certainly cannot insure intentional or catastrophic losses that could bankrupt the company. Question 23. An insured's business is forced to close for a month for repairs after a covered fire. The lost income the business suffers during this period is an example of a N. A. Speculative risk. B. Direct loss. C. Indirect loss. D. Liability loss. Answer: C. Indirect loss. An indirect loss, also known as a consequential loss, is a financial loss that stems from a direct loss. The direct loss was the physical damage to the building caused by the fire. The income lost because the business could not operate is an indirect loss because it is a consequence of the fire damage, not caused by the fire itself. Business income coverage is specifically designed to protect against this type of indirect loss. Question 24. A claims adjuster's primary responsibility is to A. Minimize the claim payment to save the insurance company money. B. Determine coverage, investigate the facts of the claim, and negotiate a fair settlement. C. Assist the agent in selling new policies to the claimant. D. Represent the claimant in legal action against the insurance company. Answer: B. Determine coverage, investigate the facts of the claim, and negotiate a fair settlement. The fundamental role of a claims adjuster is to investigate insurance claims to determine the extent of the insuring company's liability. This involves confirming that a valid policy is in effect, investigating the circumstances of the loss, evaluating the damages, and negotiating a settlement based on the policy provisions and the facts of the case. While adjusters work for the insurer, their duty is to act in good faith and settle claims fairly and promptly according to the terms of the contract. Their goal is not to arbitrarily minimize payments but to arrive at an accurate and fair amount. Question 25. Under the provisions of the National Flood Insurance Program, NFIP, which of the following is true? A. Coverage is automatically included in all standard homeowners policies. B. Coverage can be purchased from any licensed property and casualty agent. C. There is a 30-day waiting period before coverage becomes effective. D. It provides open peril coverage for both the building and its contents. Answer: C. There is a 30-day waiting period before coverage becomes effective. The National Flood Insurance Program, NFIP, has a standard 30-day waiting period from the date of application and premium payment before a new policy takes effect. This rule is in place to prevent people from buying coverage only when a flood is imminent, which would be an example of adverse selection. Flood insurance is not part of a standard homeowner's policy and must be purchased separately. While it is sold by PNC agents, it is ultimately a federal program with specific rules, including this important waiting period. Remember to advise clients to purchase flood coverage well in advance of a potential need.